Welcome back to Markets Today. I'm your host, Mbithe Mwema. It's a Thursday, it's almost the end of the week. How is your new month coming along? What are your investment goals? Have you also been paying attention to what's also happening in the global markets? Are they choppy? Are there opportunities for you to make some money there? And how can you actually be able to find partners who can work with you in this journey? In studio today, we are joined by Mr. Nahashan Mungai. He is an executive director at Standard Investment Bank, and he's also the lead when it comes to the new product that has been rolled out by the bank, which is Mansa-X. We will be discussing the Q2 performance for this particular product, and Nahashan will also be giving us an overview of what is happening in the global markets and what opportunities does he see there. A very warm welcome to you, Nahashan, to the show.
Thank you, Mbithe.
I know we're discussing second quarter numbers for Mansa-X, but perhaps you can give us an overview of what is happening in the markets. What is Mansa-X, perhaps for somebody who's watching this for the first time and is not aware of the product?
Okay, thank you very much for having us here. It's always a pleasure to come here and discuss our product.
Yes.
So Mansa-X is a product of Standard Investment Bank. It's a multi-asset strategy fund where we have a bias towards global asset classes, and so we're talking about trading in currencies, precious metals, global stock indices, commodities. I don't know if I mentioned precious metals.
Yes.
And cash and cash equivalents.
Okay, fantastic.
Yeah.
And how much of your portfolio is actually in Kenya vis-a-vis global, or are you largely just trading in the global markets?
Well, we also trade in Kenyan asset classes. Because we are a Kenyan shilling denominated fund. So we like to think of ourselves as a local fund, but that also has exposure to global markets.
Okay.
So I'd say, I can't give you the exact percentages, but we actually also trade the Kenyan markets as well.
Okay, fine.
Let's just say that we look at the world as a global opportunity for ourselves, and Kenya is also one of the markets we look at.
Okay, fantastic. So before we go into the matrices of Mansa-X and how this particular fund performed in the second quarter, can you please just give us an overview? What is happening in markets from where you sit? Are you stressed out? Are you becoming less stressed out because there's a bit more stability in terms of understanding the impact of C19?
Yes.
How is it today vis-a-vis 3 months ago for you?
Of course, 3 months ago was crazy.
Okay.
What happened towards the end of March, towards the end of the first quarter, that was completely unprecedented, and nobody expected that we'd have a catastrophe of this kind. At the time, I don't think the world expected that COVID-19 was going to be a global menace. We thought it was restricted to China, and when it came out and it was clear that it's a highly contagious infection that was going to take over the world, the markets panicked. Everybody was facing something that we had only faced hundreds of years before. So this was actually a very big game changer. So Q2 was definitely a very interesting period for anybody who was trading global markets, and Mansa-X is no exception.
Okay.
Yeah. So I'd say this year has been a very interesting ride in the markets.
All right.
From a very interesting Q1 to a very scary Q2. Now we're in Q3, and we are starting to see that maybe some of the fears around COVID-19 might not be as big as we thought, or maybe we are better prepared to deal with this catastrophe than we were before, both from our mental status to how governments are prepared to deal with the infection. So it's been a very interesting time in the markets.
But your hair hasn't turned grey, so you look
like
okay. You still have a smile. Maybe at the back. Okay, fantastic. So you're saying Q3 there's a bit more stability, at least in terms of perception and mindsets.
Yes.
So when you're looking at the global investment space as well as the local investment space, are there then more opportunities that are jumping out, or were there more opportunities in the second quarter?
Well, the second quarter, I'd say the opportunities are more clear now.
Okay.
We've seen a V-shaped recovery in global markets for most stock markets, especially the U.S. stock markets. At some point, the S&P 500 shed a big portion of its value, but now year to date we are up about 10%.
Okay.
If you compare with last year, the S&P was up 28%, and there was a fear this year that maybe it's going to reverse the entire gains, and it did. Just after the COVID-19 hit, the S&P was completely wiped out.
Wow.
It wiped out the entire 2019 returns. Then we had a very quick V-shaped recovery where it not only gained everything back, but now we at all-time highs again. Wow. So it's a very interesting time now, because you're dealing with a period of extreme pessimism, which has quickly been flipped on its head to a period of the highest optimism in markets we have ever seen.
Okay, wow, very exciting.
The Dow Jones trading at all-time highs, the S&P at all-time highs, and we feel that because COVID-19 has created an environment where we might go through periods of extended low interest rate environment, then therefore markets might continue to outperform for a while.
Wow.
Which is counterintuitive if you think about it.
I know. I threw away all my framework of thinking. This is a research. It doesn't work anymore. I still have my biases.
Yeah.
But now, from the different spaces, I know your fund invests in different asset classes. There's commodities, there's equities, there's currency.
Yes.
What has been the best performer in terms of the asset classes, and what's the possible best performer from where you sit between now and maybe the year end?
Our best performer is, this has remained consistent because these were still the best performers last year. The U.S. stock markets are our biggest performers, as well as commodities, especially gold. Gold was an outlier for us in Mansa-X, and we also saw outsized performance in oil. And at some point there was a bit of a shocker in quarter two.
Yes. But
again, it recovered very well, and that has also been an outperformer. In terms of currencies, and this is something that we expect will continue into quarter three, as the recovery continues and hopes of the recovery continue, we expect that there will be a sustained dollar sell-off.
Okay.
So this is something that medium to longer term investors should be looking out for.
Okay, so when you talk about currencies, are there any particular pairs that jump out to you in terms of an upside between now and the year end?
Oh yes, I'd say towards the year end, I expect that the euro should continue to gain against the dollar. We expect that the pound as well should recover considerably against the dollar as well. And then from an emerging market perspective, due to hopes of recovery and hopes around higher prices in commodities like gold and aluminium and other metals like platinum, we expect that the South African rand will start recovering against the dollar continuously towards the end of the year. Okay,
fine. Those are some interesting tidbits. All right, now let's get into the crux of the Mansa-X product and the Q2 performance. I think our graphics team has a few charts that they can put up from your fact sheet. So walk us through the performance for the second quarter. Just what was happening with Mansa-X?
The first quarter, obviously that was the beginning of the year, and we returned just around 24.5% in the first quarter, and around the time when the year started, it was easy to pick out the asset classes that we felt would outperform or underperform in that case that we'd need to short, and that worked very well for us. Then in quarter two, we turned very defensive.
Okay.
We turned very defensive. Obviously, in retrospect, it's easier to say now that, oh, listen, you probably should have bought these stocks more, or you should have bought a little bit more of these particular asset classes than you did. But the reason we did that was because we are very keen on risk management at Mansa-X.
Okay.
So sometimes if we feel that there's a lot of uncertainty around markets and it's in an environment where a lot of outcomes are unpredictable and we cannot reasonably make predictions as to how asset classes will perform, then we just stay out.
Okay.
So you'll find that in quarter two we were heavily weighted towards cash and cash equivalents.
Okay.
And you can see that.
So that's the 16%, and then vis-a-vis 24%.
Exactly.
And any person that we spoke to, all the different spaces that we were sitting in, actually cash was king. Was the basic thing. But I think actually also holding cash, being defensive, and having a 16% return, I think that's very impressive given the turmoil that was happening in the market.
Thank you.
So then what do you expect? Do you expect to continue being defensive for the third quarter? What are you looking at in terms of you can't really give us a firm guidance on your full year returns, but if I put my money with you today, how should I sort of look at it in terms of returns?
Well, I'd say now in quarter three, we have we have a lot more clarity in terms of how we expect asset classes to perform. Most importantly, I think we're very clear about the risks that we are facing and the opportunities that we are facing. So when I come to the risks, which are the ones we prefer to start with,
all right.
we can quickly look at COVID-19, for example. The risks that we have been facing with COVID-19 is having a second wave of infections. And we were expecting that mid-June, globally, you'd have a second wave of infections. And we thought that this was really going to create more severe lockdowns than even before. But this never happened. This never materialized.
Yes.
And therefore, we have a bit more optimism there. But we still feel that governments will continue creating low interest rate regimes because of this. The second risk that we have are the US federal elections in November. So we feel that, obviously President Trump, it's very important for him to get re-elected, and this will determine how he then handles the markets. Of course, the fact that markets have outperformed, we feel that will most likely create an environment where he can actually get re-elected in spite of what everybody thinks about him.
Okay.
Yeah, it's very likely he might get re-elected. But then the biggest risk in the US elections is actually not Trump from a market's perspective. It's actually Joe Biden.
Yes.
If he is elected, then there's a chance that he might reverse some of Trump's tax cuts, for example, the ones that he instituted in 2017. He might reinstitute some of the regulations that had also been removed, especially in the oil industry. So this might actually reverse markets. So that's actually the biggest risk for markets. It's a Democratic win.
All right.
And then the third risk, obviously, is the U.S.-China trade tensions. Right now, Trump is quiet on it. This is not a good time for him to talk. But in case his polls reduce, then he might feel that nationalism might be one of the ways to get himself re-elected, and might then reinstate tensions with China deliberately to create some sort of nationalism behind his sentiments. And this again might affect markets. But these now are much easier things to predict.
Yes.
And then from an interest rate perspective, we feel that there'll be sustained lower interest rates and asset purchases from central banks around the world. So based on this, we still expect the dollar is going to be on the back foot. And based on this, therefore, we also feel that most asset classes, especially high-yielding asset classes like stocks, real estate, and precious metals, will continue to outperform.
Okay, interesting. Yeah. So there's an opportunity in real estate and in stocks, but you've given us a very good perspective when you're looking at the global markets. Yeah. Do you have the same sentiment? Do you have the same sense when you look at the Kenyan investment space today?
Well, I have a concern on emerging markets, because one of the impacts of this COVID crisis is the fact that it has created a deglobalization. Okay, so that's a good thing for developed markets, because they don't export their technology and they can be self-sufficient. But emerging markets, in a sense, then they might run into headwinds based on this. So even locally in the Kenyan market, you then have concerns around, do we have enough dollar flows to keep our FX reserves healthy enough? Because right now you don't have enough exports, and with a reopening of the economy, you still have to import as much as you were before, with probably less remittances and less exports. So I think emerging markets, not just Kenya alone, will probably run into some headwinds.
Okay. Yeah. So it sounds like you have to literally be in the market every day, looking and processing the information and the news that's coming out, and then making a decision.
Yes.
Okay. Now let's come back to Mansa-X. So you've given us an indication of you still expect it to close in the positive, at least for the remainder of the year. I know your fact sheet is out, and we'll still keep putting up data. So how has this grown? I know we spoke at the end of the first quarter when you released your results then.
Yes.
Have you seen increased growth? Is there growing appetite from the investment community in Kenya for this particular product?
Actually, we have, and we were actually pleasantly surprised by it, especially during the COVID season. Right in the middle of it, we expected that there would be a slowdown in investments into Mansa. It was actually the other way around.
Yes.
And we saw a lot of investors now interested in investing not only in liquid assets, but also in easy to invest into assets. So we've actually grown as a fund. I don't know when we last spoke how what figure I quoted at the time.
Was it about $10 million?
Yeah, now we are double that.
Oh wow, interesting.
Yeah.
Because that's I think less than 3 months actually.
Yeah, so we've grown by about $1 billion in 3 months.
Oh wow, fantastic.
Yeah.
So the accounts also are doubled as well?
Yes.
Because I think it was 5,000 accounts, I think.
No, about 600 at the time.
Okay, no, yes, it was 600. Sorry, it was 600, 500 accounts.
Now we're at about 1,300 accounts.
Oh, fantastic.
Yeah.
And are all of this Kenyan accounts, or is it people in the diaspora?
Mostly Kenyans.
Oh wow, fantastic.
Mostly Kenyans.
Has the ticket size changed?
No, it's the same.
It's the same. What's the ticket size? What's the minimum investment?
Our minimum investment is to 50,000 shillings.
All right.
And we have seen, I mean, if you compare us to traditional investment classes where people have previously invested in buying land and so on, investors have started seeing that there's a value in investing in a fund like Mansa, which not only gives them a higher return, and I like to keep emphasizing this, also gives them a better liquidity. So in case of anything, they can access their funds. So we've grown largely also by a lot of word of mouth, people just telling their friends, and because our returns can be verified on their statements and when they withdraw their funds. So we've grown very organically, and we expect that this is going to continue, and our target is much higher than where we are right now. There's a bit of disruption, of course, due to COVID, but like I said, much less than we expected.
Okay.
Yeah.
All right. I think we have to take a brief break. We take a brief break. When we come back, we continue talking about global markets and how can you actually get access to some of these opportunities right here at home. We always want to hear what your thoughts are. If nothing else, say hello to us. Tell us where you're watching us from. Our SMS line is 20146. Alternatively, you can reach out to me, that's Mbithe Mwema, on Twitter, Instagram, Facebook, or LinkedIn, or you could also reach out to us as a media house, that's Metropole TV, also on Twitter, Instagram, LinkedIn, or Facebook. We want to hear what your thoughts are. Are you following this conversation? What more do you want to know about Mansa-X, and how can we be able to help you to answer your investment questions? We take a short break. We will be back briefly.